action, but how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and the F&O cues that you need to watch out for this morning as well. It's been a topsy-turvy week, if I can call it that. Last week we made a record high and then ended the week lower. This week we fell the most in 4 years in a single trading session, and we are up for the week. So it's been that kind of a market. You can see that the Nifty, the range that the Nifty has had, almost 21,200 on the downside, and the record high that we made, 23,300 earlier in the week, that is still some distance away considering the fall that we saw on Tuesday. So we are still covering some ground, but we are still positive for the week since we closed above Friday's high of 22,530. Now, some important levels, of course. Yesterday's high is an important one to watch because we faced some resistance at 22,900. 24th May's close is important, 22,957, because that is where we will reverse the losses that we made from last week as well. So that is an important level to watch. And of course, the psychological level of 23,000 on the upside. The Nifty Bank has been the underperformer. Yesterday also it faced some resistance at 49,600, but it has managed to hold on to the 49,000 mark. So the bulls would take some comfort from there. For the week, as I mentioned, the Nifty is up over 1%, but the Nifty Bank is absolutely flat. It's the underperformer. The banking stocks putting some pressure, but the Nifty is up considering help from IT stocks. But the broader markets, though, are still facing the brunt of Tuesday's fall. The mid-cap index is still down close to 1% for the week. The small-cap index is down 2.5%. So there's a lot of ground to cover for these indices as well. The outperformers yesterday, Realty, PSUs, they still continue to rebound, covering more ground that they lost on Tuesday. But the underperformers, FMCG was the star on Wednesday's trading session, but then it fell to some selling pressure yesterday as well. Some of the important cues emerging, of course, the RBI policy outcome later today, the crucial NDA meet, the government formation becomes more clearer, and of course the non-farm payrolls data. The GIFT Nifty is also indicating an absolutely flat start for our own markets as well. Now over to Vamakshi, who would list out the stocks that you need to watch out for in today's session. Vamakshi, good morning.
Well, good morning, Hormas. Let me first start off with ICICI Bank. SEBI has issued an administrative warning to the bank on outreach undertaken by the bank for delisting of equity shares of ICICI Securities. SEBI says that the outreach program was inappropriate. PPP Fintech also in focus, and that is because its chairman and CEO Yashish Dahiya has received a show cause notice from SEBI, and this is on 2 million investment made by its Dubai unit for acquiring nearly 26.72% stake in YKNP Marketing Management. Bajaj Finance and Bajaj Finserv also on our radar, and that is because Bajaj Housing Finance's board has approved the IPO. This comprises of a fresh issue and offer for sale, and the IPO is expected to have a fresh issue of around 4,000 crores. RVNL also on our radar. They've received a letter of award for a project worth almost 495 crores from NTPC. Tata Chemicals, however, could be under pressure today, and that is because UK's Chester Crown Court has ordered Tata Chemicals to Europe to pay around 1.1 million GBP of fine. Hero MotoCorp, the board has approved purchase of additional shares up to 2.2% of Ather Energy for 124 crores. Tata Steel NCLT has approved merger of Bhubaneswar Power into Tata Steel. Mastech has introduced ICX Pro platform with NVIDIA AI Enterprise. IRB in focus as the company announces a nearly 30% jump in its May toll collections. All cargo terminals also on our radar. They've gone ahead and signed an MOU with Kensis terminal, container terminal, and this is to operate KCTL's container freight station at Chennai for business as well as capacity expansion. HUDCO has signed an MOU with India Infrastructure Finance Company to manage projects. And lastly, let's also focus in on RITES. They've received a letter of award worth almost 40 crores for loco hiring along with operation and maintenance from Tata Steel.
Interesting list of stocks there, Vamakshi. Thanks a lot for joining in. And lastly, we move over to Nigel, who's joining in with cues from the F&O space. Nigel, good morning. It's been an absolutely topsy-turvy week. What's the setup looking like?
Well, I think, Hormuz, you were mentioning that the RBI governor is likely to pause, right? I don't think it's a bad idea for most traders out there as well. Take a bit of a pause, take it easy today, and, take your fresh course of action from the following week itself. Now, what I expect is stock-specific action to continue. On the headline index, I think, a bit of consolidation won't hurt anyone. And yesterday's trading session as well, just take a look at the screen. That's telling you it's getting more and more stock-specific. If you look at the Nifty, well, it did well, but you had the mid and the small caps did better. And the Nifty next 50, in fact, did even better than the Nifty. It was up closer around 2%. So it's getting more stock-specific. In terms of the flows, I just want to make a quick point out here. if the net institutional flows crosses 3,000, 2,500, 3,000 crores odd, it's very difficult to, rally from here on. Yes, we got away with around 200 points odd, but otherwise, rallying when you're seeing net institution sell number at around 2,500, 3,000 on is going to be rather difficult. What did the FIs do in yesterday's trading session? Well, they lightened their positions, both on the long as well as on the short side. Though on the short side, they covered a higher number of contracts, close to around 33,000 contracts odd. What does this bring the FI net short positioning to? Well, it's come down. A few sessions ago, it was at around 3.55 lakh contracts. That's come down to around 2.87 lakh contracts. So that's, some bit of short covering has taken place, though they're still net short. But on the client side, we were mentioning this for the last few days. They have been net long on the index, though they have skimmed down some of their long positions. Just keep that in mind. Levels that I'm looking at, well, they come up for you on the screen. Yesterday's high, that becomes a bit of a resistance. We need to cross that to get past the 23,000 odd mark. Till we hold above the 20 and 50 DMA, the bulls will still believe that they have this covered. But I think it's still going to be very much stock specific. Back to you, Hormuz.
A bit of consolidation did no harm. Words of wisdom from Nigel this morning.